Welcome to the Master Your Millions podcast, the show all about your financial potential and leaving a legacy for future generations. Here are your hosts, Jason and Scott Henderson.
We've got a guest we've known for quite a long time. Jason, who do we have coming on?
Scott, this is a rare occasion, at least thus far in the podcast. We are repeating a guest that we've had once before. I'm excited to have Eileen Galbraith with us today. Sorry for the pronunciation. In case you don't remember from before, this is a lady that's really originally from Philadelphia. Spent most of her life there, but then for a big part of her career was in the retail sales, clothing, different things, managing stores. And then she started to understand a little bit about credit and what personal credit does to you, both individually and professionally. And then when you start a business, how that affects you. So today we brought her back to talk a lot about personal credit and what a gateway that is. We have a common friend that says you can run from your creditors, but you cannot run from your credit score. So welcome to the show, Eileen.
Hello, and thank you so much for having me back. This is such an important topic for everyone to be paying attention to, especially with some of the new changes with the FICO scoring model that have occurred over the last year.
Yeah, I know what you're talking about. Tell us briefly about some of those changes.
So in the past, first and foremost, everybody worries about what their credit score is, and that's really not where your attention should be. It should be on your behavior towards your credit, and I'll talk about that in a moment. But one of the biggest trends that have changed in the FICO scoring model in their algorithm, there's a new score that's out there. They update their scores every couple of years, their model. The new one is called the FICO T, or FICO 10T. FICO 10 is the next model. The T stands for trending. And the trending is very important. If people do not understand this as they're going about paying and using their credit cards, they're going to get stuck and their scores are going to get lowered. So really quick, all trending means is everybody knows that, most people know that 35% of your credit score is based on how you pay your bills. That's a big chunk. The next 30% is how much of what you actually have available are you using. So 65% of your score is affected. What the FICO 10T model is now looking at is the trend of how you're paying your bills. Do you pay just the minimum amount? Do you pay just when the due date or right before the due date? If you pay a week earlier, and if you pay more than what the minimum amount is that's due, that's trending. They're going to watch, and the they in that sentence is the FICO scoring algorithm. They're going to watch how you pay your bills now. And they're reporting that for those companies that are now using the 10T model. They're reporting that, and it trends on your credit report. You're going to see this is what was due, this is where they paid it, this is how much they paid. What's important about that one little thing, that change, is that when you go to apply for funding, you go to apply for a new credit card, you're looking to buy a home, you're looking to buy a car, any major purchase that you're making, it's now going to be affected. They want to see people and their behavior around how they're taking care of their personal credit. It is a very big change. It came out over a year ago, and it's just now being introduced by the companies that are going to use that model instead of using the current FICO 9.
So tell me, in the event, what's the best way to affect your credit score when you're doing credit card payments? So obviously paying the minimum, best if you pay it completely off. However, you should be paying it 4 days before, 3 days before, on the due date. What's best?
So I would never just pay my payments on a due date or 1 day before. I would give it at least that 7-day leeway. I personally, when I am using my credit cards, I usually pay it off every single month. When I do have a balance on it, I'm paying my bills a month ahead of time, 30 days ahead of time, so that number one, I'm never going to miss a payment. Because if you miss just one payment, that's going to lower your score significantly. Because remember, that's 35% of your score. So my counsel to any of my clients that I speak with when I'm doing their analysis for them, we look at that trend. How are you paying it? Let's get it into your cash flow plan. Some people call it a budget. I don't like that word. Let's get it into your cash flow plan, and let's make sure that these expenses are going to those financial obligations first, so that you can make sure that you are always paying a little bit more ahead of time, and you're paying a little more than what's due. Say it's $70 is due on your account. I would pay 90 or 100. That little bit of extra payment that you're making is now showing the lender how responsible you can be. And you guys all know about lending. The lender wants to see what's your risk factor for them. Is there an opportunity that you're going to go 90 days late on anything? They want to know this ahead of time, and that's where the behavior comes in. Can I speak to that for a moment, just about the behavior?
Please.
Okay. So remember when we were in high school or college and we had a big test coming up, and there's two students. Student A went out and partied the night before, never worried about whether they were going to pass. They figured everything was going to be good. They take the test, and then they're surprised that they failed. Well, student B, very studious, they're in their room, they're studying, they're making sure they are 100% prepared. They take their test, they get an A. No surprise. So the difference in the behavior is the same for your credit score. We were giving grades in school. We got used to that. The FICO scoring model came around, and it's doing the same thing. The score is not important. It's what we want to achieve. It's the behavior that you're doing that shows up in your credit report, which the score can now be created because it's going by what's in that report. So a couple of things. We're coming to the end of the year, right? 2025 is just around the corner. When's the last time you actually looked at a 3-in-1 credit report that shows all three of the three major credit reporting companies? Because you want to compare them side by side. It's not always going to show the same thing. They're never 100% accurate. It's three different companies. They're their own business. They report whatever the creditors give them. So it's your behavior behind what you're doing. And that's why it's so important with the FICO 10T model coming out, that you're paying a little bit more ahead of time. You're paying a little bit more so that they can see the trend and you know how to handle your personal financial obligations when it comes to your credit.
Sounds familiar, Scott, doesn't it? We interviewed David Stearns here a few weeks ago, and his father's the one that wrote the book Becoming Your Own Banker, which has all, the infinite banking concept. And it was interesting that he said your behavior is the most important factor in the whole thing in being your own banker. It's not policy design, and that's not the company, it's not this or that. The number one thing is your behavior. And now you're saying the exact same thing in creating a credit score. I
Well, there's
find
the
that
saying
interesting.
out there, Jason, how you do anything is how you do everything. It's true. How you handle your financial obligations is how you're going to affect the rest of your life, right? I mean, look at, we're trillions of dollars in debt with just credit card. What's happening to make that happen? Yes, the interest rates are outrageously ridiculous. The usury laws are not being honored as far as I'm concerned. To make that not happen. But how we're taking care of our own financial obligations, it's on us. It's our responsibility. Yes, economy happens, life happens, situations happen. We have to take ownership and responsibility to look at what is it now, and this is where I love to strategize with my clients. What is it now that you can do to offset those financial obligations? And when I'm working with people, it's all about, well, let's make some more money. When I was in retail for 42 years, every one of my managers, I always said to them, sales will take care of everything. The more sales you have in your business, most of your expenses are fixed. Some are not. Merchant services are not. Then you're going to have a bigger profit. And every one of my stores that I oversaw 14 stores throughout my career, every one of them had triple their amount of profit when I left their stores. Because we reviewed their balance sheets, we reviewed their profit and loss statements. Obviously, I reviewed their setup of their store, their customer service, those types of things. Everything is about taking care of the sales. When the sales happen, everything else just comes out the way it's supposed to, and your profitability is higher. Oh, you're muted.
Oh, sorry. I thought I unmuted myself. Yes. What does it look like when someone comes and work with you? And then what is like a long-term thing? Because most of the people that listen to us here on Master Millions are business owners. They're entrepreneurs. They're attempting to escape the W-2 rat race and do some things on their own. Why is even, and you can probably say some to this, Scott, you're kind of in the mix with this, attempting to establish business credit. Tell us just a little bit. So someone say, okay, they raise their hand, they want to find out how, Eileen, how you would help them to start to better their credit, and then what you would start doing to help them build a foundation, if you will, for business credit.
Absolutely. Absolutely. So first and foremost, I'm a credit educator. I'm not a credit repair company. I did that in the beginning of my career. I learned it. For me, there's just too many laws and regulations involved in that, and there's too much information that is misinformation out there in the world. So I became a certified FICO Pro. I did all that education so I could learn to teach people how they can understand their credit profiles. And then if they have a blemish that shows up, if they have something that shows up, if they, whatever occurred in their lives, that they can now learn and understand how to correct it. Because you can correct your own credit report. You just have to know what you're looking at. So when somebody comes and works with me, the very first thing that I do for them is an analysis. They get a copy of their own credit report. It's called a soft pull, so it does not count against a credit inquiry. And we go through that report line by line. That's why, for me, it's important that they have a one-page document that has 3 credit reports going across it so I can see how it's reporting. And, probably 80 to 90% of credit reports are wrong anyway, because it's a human being putting the information in. Sometimes a typo happens. All of my clients, when I first look at their reports, the personal side, their personal data, it's wrong. We correct that. I tell them what they need to do. They write a letter to the credit bureaus. Super simple, doesn't have to be complicated. You don't need to talk about a whole bunch of laws that are out there, because when it's going into the credit reporting company, it's going into a system called eOscar that reads it, finds out what you want, gives it a 2-digit code, and then it's on its way to be corrected or challenged or whatever. Okay? So understanding, first and foremost, getting a copy of your credit report, we go through that. I give the insights, the information, some counsel on it, education, and then they can go and do what they need to do. I work with them one-on-one to assist them with that process, but it is not a credit repair company. I don't have them go and say, okay, sign up with this company. They're going to take care of it for you. Because most people who've had those challenges and don't understand what's going on, they're going to make the same mistake again. It's just inevitable because they're not understanding what's happening. The biggest reason for a business owner that is so important, you want to now be able to create credit for your business entity, because that's where the power comes in of money. When you go to apply for a loan for a business line of credit or a business credit card, they're always going to look at the credit report of the owners of the business. Every owner that has more than 20% interest in the business has to be reviewed in order to make that decision. The reason all of that happens, again, it's about the risk factor. Are you a candidate for my bank to give money to, and are you going to pay it back? The business, even when you just open a business, you can get business credit. There's steps to take to do that. And that's where I work mostly with my clients in my programs to help them do that, so that you just don't arbitrarily open up your checking account because you just got a new business and then ask that banker, can I get a business credit card? Sure, we'll give that to you. Or no, I'm sorry, we can't, and you get denied. You don't want that to happen. Most banks will want you to have a personal guarantee on it, which means they'll graciously give you that credit card in the name of your business, and then your name can be on it too. And you are personally responsible for it if anything happens to your business. That is not the kind of business credit you want. The business credit you want is the business is 100% responsible for paying back that credit card. That's where we want to get you to. Same with your lines of credit for business. I love lines of credit as opposed to loans because you always have those funds available.
So
Any other questions?
since the business is always, especially when you first start, is so reliant on an individual's credit, is there a perfect credit profile, and what does that look like?
So yes, most banks will, you have to have at least a 640 credit score, a FICO credit score, not a Vantage score. The difference is the Vantage scores were created by the 3 credit bureaus to compete with FICO, and their educational scores, they're usually lower than your FICO score. So you want to know what your true FICO score, and you can always go to myfico.com. That's the best place to buy. You have to buy it. The only time you can get a free credit score is if you applied for a mortgage and got denied. They will give you your credit score that they pulled at that time. If you're a new business owner, as I said, if you just opened your business, you can apply for business credit. In the beginning, it will be personally guaranteed until you have an opportunity to show revenue in your business. The 640 score is what they want. They don't want to see any blemishes, no bankruptcies, no liens, nothing, no negatives reporting to your credit report. They want to see at least 6 months of revenue in your business checking account. That could be coming and going. And an ideal there is obviously the more deposits you have going into your business account, the better opportunity you're going to have to be able to get loans. A minimum of 5,000, there's a bank rating out there. A minimum of 5,000 will give you about a 4 or 5 number bank rating. So they look at that favorable. They're also going to want to see if you have any other trade accounts established for your business already. Those are called net 30 accounts, where you have 30 days to pay something off. There's a lot of companies out there that do not report to the business credit bureaus. I help my people be able to get to the ones that do report. Again, we don't want anybody to be denied credit because then that'll hurt you. Because every inquiry that happens on the personal side and it's denied, your credit score is coming down 8, 10, 12, 15 points. Nobody knows the actual number because I don't work for FICO. It's a proprietary thing. So the best way for you to do it, be in business for at least 6 months, have a 640 or above FICO score, no blemishes. And the last part of that, and most important, is if they're going to look at your personal credit first, your usage has to be under, some companies say 40%. I personally like it 20%. So the usage is how much of what you actually have available on your credit card limits are you actually using. So on an everyday basis, I like to keep it under 20% because your score is higher. You know, your usage and your score are like a seesaw. The more you use of your credit, the lower your score goes. The less you use of your credit, the higher your score goes. So it's constantly a fluctuating number. And the FICO score is not even a real score until the day an application is submitted and the score is pulled. I hope that answered that in my long-winded way of answering that question. What's the best thing to have? Did that help?
No, that's great. And speaking of credit cards, like on your personal profile, is there a certain amount that you're supposed to have? Because I've heard people, some say 3, I've heard other people say 7.
3 to 7. 3 to 7. You could have as little as 3. You could have as many as 7. I would not go beyond the 7 on the personal side. And here's the thing. How do you manage them? I had a client who had 42 credit cards.
Wow.
She now has 5. We had to manage that accordingly because you don't want to just arbitrarily trade accounts, because every move you make with your credit has an effect on that score. And you have to know the strategic moves to make in the right order and the right timing to not affect that score drastically. So,
And
yeah.
so are all credit cards created equal? Like if I get one from Apple, is that going to be equal to say one from Chase?
I would say yes and no. Yes, in the fact that they're now trusting you to pay back your debt. They're granting you credit. I don't know what the interest rates are going to be on each one of those cards. I always go to one particular website to look some of these things up so I can counsel my clients on stay away from that card, stay away from this card. It doesn't matter what type of credit card you have on your account. That's a misnomer that's out there. Yeah, some people talk about subprime accounts, like the Oh, I can't even think of any. Fortiva is one of them. There's several banks out there that people used to say, credit repair companies say this. You don't want to have those accounts because it reduces your score because it's a subprime account. Doesn't matter what credit card you have. It matters how you're using your credit card.
Okay.
And
So
the other answer to that, Scott, is go with the bank that you're comfortable with. If you already have a banking relationship and you're in good standing with that bank, you should be able to get a business credit card. It will be personally guaranteed because unless you know the source to go to, most banks will personally guarantee it, which means you are responsible even if the business fails.
all right. So let's come back to the scoring model for a second. They're updating that. I work in the mortgage industry, and the model that is always used there is the FICO 542, which is like 30 years old. When are they going to update that?
That is up to so when they do an update on the scoring model, they have to pay for it. The banks have to pay for that whole new system because they have to what's the word I'm looking, kind of like reboot their system. It's a whole different structure that they have to pay for to come in and update. That's the word I'm looking for. They have to update their system. A lot of banks don't want to pay for that. They'd rather make money than spend money. And the mortgage industry is notorious for that. They figure it's not broke. Why fix it? It's serving their current purpose.
I gotcha. Have you seen any sediment where it needs to be? People are starting to feel like it needs to be updated, or is it still, let's just not rock the ship?
I think it's serving its purpose. However, with the 10T that's coming out and it's rolling out into different banks and different institutions, the mortgage industry is going to have to take a look at that. Because now it's hurting people on being able to get a mortgage if the model isn't correct. And that's a whole nother conversation. And you know this because you deal with this all the time.
Yes, I do. I deal with the 542 and the Vantage 3 quite often. So, Jason, you're being quiet. What kind of questions do you have?
Well, I want to talk a little bit more, Eileen. You see, your behavior is the most important thing here, and I think I heard that when Scott asked you the question of, are all credit cards equal? That was part of the yes, for the fact that even though you might have a top tier credit card from a top tier company or bank or whatever, your behavior still has the biggest effect on everything. So if you have good behavior, then that affects everything. So
Right.
what would you say are the three biggest mistakes that entrepreneurs, self-employed business owners make with their personal credit and then with their company credit that prevents them really to grow? Because let's be honest, if you have company credit, and the biggest companies have, there's different tiers. I mean, Apple, Scott's mentioned Apple, we have Walmart, you have I don't know, Caterpillar, John Deere, whoever, the big large corporations, they are, and I don't know what you even call it, but they're at the highest level of credit. They can get access to credit right away. If I need to build a $4 billion plant and I need to do it fast, that company has the credit in order to do that. Well, let's bring it down to the individual level and say, okay, I'm a business of 5 employees or even 2 employees. I still need to have access to capital, whether I need to move to a new office, build an office, expand something. So tell us, what are some, maybe the top three mistakes that people make that they should avoid?
Right. So
Obviously, number one being they
their
haven't paid their
behavior.
bills on time.
Their behavior. But actually the number one for me from a personal to a business aspect is commingling your funds. There are so many entrepreneurs when they first start, obviously they're starting as a solopreneur until they talk to one of us and realize they don't want to do that. They want to have an entity structure because your tax benefits are better there and you don't want to commingle your funds. So an entrepreneur starts out with using their personal credit cards. They're not documenting what they're using them for. So therefore, even as a sole proprietor, you don't have an entity structure. You don't know what you've been paying for your business to get that business even started. So there comes a point in time where you want to stop commingling that, because when your business is starting to make some money, you're starting to move forward, all of the money that you used on your personal credit cards, you want to document where that's going to, because now your business can pay you back. It doesn't matter if it's 6 months later. You want to do it within the year, because then you have your tax advantages there. So commingling of funds is the biggest one. Not having the proper accounting software set up, not having the proper knowing your monies formulated, knowing where things are going and what you're actually spending things on. So commingling of funds is the biggest thing. The second biggest thing is when it comes to the personal credit and the business credit limits are usually 2 to 3 times higher than what you have on your personal side. For example, if you have a $10,000 limit on your personal side, and that's the highest limit credit card you have, you should be able to get a business credit card for up to 3 times that, a $30,000 limit. And you want to achieve that. Again, it's the behavior towards your personal that's going to affect what kind of business credit you can get. So it goes back to all behavior. If you only have a $2,000 credit card, what can happen for you to make that go to a higher limit? So now when you're opening your business and you're funding your business and you're looking for that business credit card or the lines of credit, how can you get the personal side limit up as high as possible? And this is a strategy that I work with my clients to do. So that now when they go to apply for that business credit card or that business line of credit, they are in a favorable position to be able to get at least 2 to 3 times more limit than what they have on their personal. So that's the second thing about the behavior with your credit. Understanding how this all works together is very pivotal to how you're going to get the funding. And I would say the third thing is not having the right business structure set up that goes to your business. In business credit, they're going to look at your name of your business. It's one of the qualifying factors. And if your name of your business is something that they don't find favorable, you don't get credit. Real estate is a big industry for that. Depending on how your business name is for your real estate, whether you're a realtor, whether you're a fix and flip, if you have whatever it is that you have in your real estate portfolio, how you name your business can either be a yes for funding or a no for funding. How that's listed. And I think that's the third thing, not having the right entity structure and the right business name set up. And then there's like 10 different things that you need to have in place in order to get business credit anyway. And I go over all of that with my clients too.
So you said a minute ago about having highest individual credit limits.
Yes.
How often does it make sense to go back to the lending institutions, the credit card companies, and say, hey, can I increase my credit limit? Because that's basically what you need to do, right? I have
That's one of the
$8,000.
strategies. One of the strategies. Yep.
That's
one of the strategies to get a higher credit limit is to go back to your credit card company and ask them. And normally it's a soft pull. They don't have to do a credit inquiry because they already know they have your accounts in front of them. They can see what you're doing. It's how you've been using your credit that's going to determine that. And they will also look at all of your other credit scores. Or I'm sorry, credit limits, to see how you're using your personal credit in order to justify them taking the risk in giving you more access to funds.
So someone that has 4 credit cards right now, they should call each credit card right now and say, hey, give me a higher credit? Or is that something that needs to be staggered?
It's something that I would need to see physically what their reports look like and how things are reporting, because I don't know their behavior. And that's a blanket statement I cannot say yes to, because I would be doing people a disservice if I did. There's a strategy on how to do this.
It's not cut and dry. There's real art to it, is what you're saying.
Yeah, exactly. And I have people that do come to me that say, well, I just asked for a credit line increase and they denied me and I don't understand. Well, we look at the credit report and it's because you have a late payment or you did this, so you did that. So what was your behavior that shows up in that credit report that's going to dictate that score? And that's what the lender's looking at. And something, and I know, Scott, you probably know this, behind the scenes, the banks all have their own system that they can see what's going on with your credit. We don't see that system. And they see so much more. The credit report that we get as a consumer is nowhere near what the lending institutions see. It was built that way. It was designed that way. It's all about them making money and you not having enough knowledge to understand how it all works. So sometimes somebody will call me or text me and they'll say, my credit card company just lowered my limit and I had no idea they were going to do that. I'm like, well, take a look at your report. Let's see what's going on. They maxed out 3 of their 4 cards and that 4th card is afraid they're going to do the same thing there and then not have an opportunity to pay. So they lower their limits and they have every right to do that. They have to notify you that they're doing it, but they have every right to do that. So saying yes to that question would do a disservice to everyone because it's a strategic way to do it.
And you have, I should have mentioned this starting off, you're a 13-time best-selling author. You've written a couple of books about this particular subject, right? Are those available on Amazon or how did people get those
They are
books?
available on Amazon. I started back in 2012 and I told my family I want to write a book. Same time I started my company. And somebody said, well, go write a book. I said, okay, how do you do that? So I'm a researcher. I love knowledge. I love learning something I don't know how to do it. So my first book I wrote in about 8 hours, figured out how to do it with Amazon. Now it's called KDP. Before it was called CreateSpace. So I went in, did what I needed to do, and published a book. The box showed up on my dining room table one day, and my husband's daughter looked at the box and said, how did Eileen write a book? Like, I just did it. I'm that person. If I don't understand how to do something, I'm going to go and learn it. So the first book was all about doing your own credit repair.
So show us, for those people, like just get a visual there.
Just a little
I know you
book.
have it there.
Just a little book. Oh, you can't see it.
Credit repair toolkit
That's the title.
for the do-it-yourself consumer.
Yeah.
Okay, I'm link to it in the show notes, everyone. Just wanted to know that there are resources out there. However, the book only gives you so much.
Right.
Really
And then
have a personal discussion about things. Keep going.
Absolutely. Well, then I went on, a couple years later and wrote one about business credit because I got involved in business credit. And as you can see, this is all from now KDP Direct. And then I went on to write a book that the reindeer were talking to me and interviewing me. So this was fun.
About credit, about improving credit.
Credit in general. All of the reindeer were interviewing the credit gal. That's my moniker. That's what everybody was doing. And then my last and favorite book, and this is the one that I actually promote. This is actually done in a story format. It's about a woman who went through a financial tragedy, and she's explaining to a couple of her ex-college friends as they're traveling down to see her how she restored things, how she hired this coach and was able to do and everything. And this is my favorite book. Rebecca's Renewal. Rebecca is
you bring that up, okay?
I love this
that really opens a whole new dimension to who you are, is you spend quite a bit of time focusing on helping women, for the fact that the financial education in the United States is atrocious. It's about as bad as it can get, right? However, even within that frame is the education that women get. Often women are not, I don't know exactly why, but they're not getting as much education as the men. And I don't know if that's because they don't go out in the workplace as much or whatever, but you have retreats for women to come, and it's in person, sometimes 2 or 3 days. And from what I gather, it's at very nice resorts. Often you'll go someplace warm and wonderful and rent out a whole Airbnb and everybody's together, but it's a workshop. It's a really interactive workshop to where someone comes in there, and by the time they're done, they're much more empowered as a female to go out and conquer whatever it is. So if you want to take just a couple of minutes, we're running out of time as far as long as we want to go here, but just tell us real briefly a little bit about your retreats. And I don't think we need to give any
Absolutely.
dates because those are ongoing, and we'll
Yes.
put link to that in the show notes. But it is something that the females that listen to this podcast might want to take a look at.
Yeah, women have a problem with money sometimes. We have so much shame and blame about different things when it comes to money. We're afraid to ask for a sale. We're afraid to even have conversations about where our money is being spent. And the retreats and the online programs that I'm doing now, it's called Implement to Impact. And the reason I named it that was because when we come together in those retreats, we are now going to implement the strategies that women entrepreneurs need to be able to move their business forward. So I'm not just a credit educator. I'm an empowerment coach for women. I love to bring, we have about 16 women coming together. We do it throughout the year. Starting in 2025, it's going to be phenomenal. But it's just about coming together as women, having the camaraderie, because we love to socialize. We love to be around like-minded individuals. And sometimes we're struggling. We're in our home offices and we're isolated and we need that support. We just need to have those other women around us. So that's why we did create Implement to Impact. And I say we because my assistant is helping me with that. And we just want women to be able to shine, to be able to bring out their skill set and be the best human that they can be for the rest of the world. And that's how we come together to do that.
Cool.
Thank you
Thank
for
you. I'm going
asking
to
about that.
really change really quick, just for a couple of minutes, change gears just a little bit. You're familiar with the infinite banking concept. It's something that you and I have had discussions about for a long time. And on a scale from 1 to 5, 5 being, maybe knowing it very, very well, where would you rank yourself in your understanding of that concept?
I'm at a 5 now because I've had many conversations with you about this. And the reason
Okay.
I'm at the
Yet,
5 is
yet
because
you're at a point where you really haven't pulled the trigger. What is it
it's
that
just the
holds
timing
you
for
back?
me right now. Yeah, it's just
And
timing for me, getting all the rest of my ducks in a row.
what would you say to women in particular or other people out there listening? You've had a journey there. What would you say to them and they're on that journey that need to know more about this concept?
Mhm.
Why do they need to know about it? What's helped you to understand it the most?
So the biggest thing you need to know is that you become your own bank. I personally do not love credit because I've learned so much about it and I know how much it can affect people's lives. So when you become your own banker, you become the person that you can loan from yourself. You do not have to show bank statements. You do not have to have a credit score. You do not have to show your tax documents for the last 2 or 3 years. You are the one that's borrowing from yourself. Once your premiums are paid into your policies, you're the one that now has control over it. That's the beauty that I see in it because then you don't have to worry about what that FICO score is. You don't have to worry about if you're maxing out your credit card. You can use all the credit you want. Just make sure you're paying it back. You know, that's the aspect of infinite banking that I love. And I don't know if people understand what the term infinite actually means. For me, it's that you can constantly be able to rotate money around the way you want to have it. So you can take funds out and invest in what you want to invest in. You can pay, Jason, don't you pay for your office from your infinite banking policy? You
Yes.
know, you can do whatever you want, what's the saying? Own nothing, control everything. This is a part of that. So I would say
It's
education is the most important thing. There's Jason, you have some fabulous books on the subject. You should be talking about that so people can get your book.
Well, thanks. No, I just wanted to hear your perspective. It's really neat because you're kind of in the mix right now of coming to understand what's going on. And it's fun to hear you say that you have spent well over a decade, close to a decade and a half in the credit arena and educating other people. And now you're saying, here's a way to get outside that
There's a
whole
better
system.
way. Yes.
right? It's completely independent of that, and where you have complete control over your financial environment. What would you
Absolutely.
say, Scott?
No, I'd say you're pretty accurate, dead on there.
Okay.
So,
I think we're getting right to the end. Eileen, this has been awesome. I really appreciate you come on, being very candor and telling everybody, grow up, I don't know what, and behave properly. I
Behave.
mean, we are within a system to some degree, right? And the
Right.
system looks at certain behaviors. If you want to have better advantage of that system, have access to more credit, which down the road on a business credit, you can pull a trigger on something. And sometimes there are deals that come along, folks, that you can make a lot of money really fast in the event you're liquid and you can jump on it. The most ideal being being your own banker and have a credit line there, right? And you move very fast, but also credit lines with banks and lending institutions. That's a business credit because it's leveraged up from where you are as an individual. She just said it, it's 1 to 3 times. So if I have $100,000 in personal credit line, I can get access to 300,000 and maybe even more as you go to the next tiers up as businesses, and you can pull the trigger and make something happen. I know that there's a big trend right now of more and more manufacturing facilities coming back to the United States, and there are major corporations that are accessing their lines of credit to
Right.
pull the trigger and to build billions of dollars worth of factories. Anyway, that's kind of a summary up. I don't know if you'll have one or two last things to say, and then we'll turn the time back to you, Scott.
My last thing is get a copy of your credit report. Take a look at what's
Oh, tell us how to
inside.
do that. What's the best way to do that?
So I have a link that you can go to just to get it for a $1 trial with a company, and then you can cancel it after that. My favorite place to go, and you're going to pay for it, is myfico.com, because that's the real deal. Buy your scores, because there's more than one score. There's a lot of scores. Buy your score, look at your reports, and educate yourself on that. When I work with people, I send them to a particular link where they can get a $1 trial for a 3-in-1 credit report. And that way I can see what all 3 of those reporting agencies are doing it. And the other thing I want to tell you is there's more than 3 credit reporting agencies. The other top 3 that nobody talks about, especially LexisNexis, get a copy of your LexisNexis report ASAP and then freeze it. Get your own copy and then freeze it, because that has your entire life. And nobody talks about LexisNexis.
We'll have to have that. Sounds like a whole nother conversation.
Oh,
Maybe
yeah.
we'll come back to that.
Thank you so much for
awesome.
having me today.
Thank you, Eileen. It's always a pleasure. Guys, if you'd like to connect with Eileen, check out the show notes down below. We will put links to her books and how to get in contact with her. If you'd like to connect with Jason or I, you know where to find us. We're also in the show notes down below. And if you'd like the show, make sure to leave us a 5-star review and subscribe. Last, remember that mastering your millions all starts with your mind and your team. Make sure they are the best. Catch you next time.
Thanks for listening to Master Your Millions with Jason and Scott Henderson. Check the show notes for any links or contact information about today's guest. Make sure to follow the show so you don't miss any future episodes.